Hi, welcome to the Market Alert for Thursday, the 30th of January 2020. So copper, crude and the yield curve crumble as the Fed flops, virus death count pops. So the markets are struggling a bit as we see the Fed, if we can just scroll down here a bit, have failed. That was the press conference. Yeah, here we go. So Fed leaves rates unchanged, extends repo bailout facility. Take note of the word bailout there. And also down here you will see Fed extends temporary repo operations. There's nothing temporary about this. This was should have happened just for 5 days, and now we're into April. And this guy's face says it all. It is laughable. It really is a joke that they're doing this, but there you go. That's what the Fed will do. They'll do anything for their paymasters on Wall Street. And the Dow, as you can see here, overnight, it's not happy about it at all. We'll look at yesterday's price action in a moment. Market trading to the 76% from this low to this high. So yeah, sitting at the 76% retracement already on the overnight, which means we could see a bounce. So let's just drag this chart over, have a look at what happened during yesterday. Well, there's a curious thing going on at the moment. Well, not so much at the moment, it's been going on for a while, but it's going to be even more difficult now. You're going to see a change in the pattern, I suspect, in the Dow. You can see it's a repeatable pattern that we've had where the Dow futures in the pre-market session have been able to move to the upside, only to be slammed when the cash market opens. And the reason for this is quite simple. When the cash market opens, somebody is offloading stocks, but then they manage to bring the market back by shorting the VIX, either with the Fed doing this with their trading desk, or buying the futures, and you see the market retrace there. And what's interesting is also where it retraces from this high to this low, right to 76% during yesterday as well. So the market started off right off selling, and we had two sell signals there. The one is only valid because the market just kept moving. We see them taking profits here with the green bar, and then a bit of a test there at the close of the previous day. And then we've got the psychological level as well. Prices close back above and they bring them back up. Notice the drop off in volume. There is no buying. This is either shorting the VIX, but certainly not buying in the stock market there. And then the market trades sideways, as we can see here, another 76%, and then they just get into a trading pattern there, sitting at the 200 MA. We then get another trade or move up to the 76%. We then get the market dropping back, and then we get the Fed announcement. And the announcement is we're going to keep printing money for the repo market, and we're keeping rates unchanged. The market didn't like this. We see the selling immediately. The first 10 minutes, prices trade down to the 200 MA. They sail through with selling, get a bit of profit taking, further selling, and then the market's retested for a bounce, and then eventually gives way to further down move there. And then overnight prices have moved down. This is the open just here, and then they've just continued to move lower, and you can see already we're down 150 points on the overnight, with the market looking to retest the S2 once more. Watch the S3 level on the overnight as well, wherever it is, just down here, just in case you get a run down to this level. Watch out for it. It's 28,415. I'm just going to go to the daily chart, and 28,415, so 28,450 is the low from Monday, when the market gapped lower on the 27th there. So keep an eye on that figure there. And in the implied volatility, a long way to go yet. We dropped to, or picked up a bit yesterday to 1405. 20 is the area we're looking at for 100% increase to show any sort of support coming into the market. So it'll be interesting to see. And again, we remain red on the implied volatility as far as visuals are concerned, because we're below the 20 bar moving average. Take a bit to get back above this. Also, yield has dropped markedly as well. We're heading back to an inversion, so it certainly looks like recession's on the cards. And speaking of which, I'll just show you this as well that I noticed earlier. Just past all of this. Don't buy the dip. SocGen sees 10% stock correction if coronavirus escalates. There was one here. Here you go. That was the one I was after. Fed official. If there is a recession, don't worry. No, because it doesn't affect you. Simple as that. Meanwhile, in Bitcoin, 15-minute chart, it was quiet yesterday. It's gone back to being range bound. No surprise there. 4 hour, you can see it's range bound. And the daily chart, after the move up on Tuesday, yesterday there was some selling around, and sideways at the moment on the overnight. Okay, that will do it for this one. Keep an eye on those levels in the Dow, and we'll see what happens. And with that, thanks for watching. See you in the next one.